Welcome to Advice and Opinion Demographics and Markets. Today we want to show you three of the most important elements of our innovative investment approach. These elements are demographics, stage analysis, and monetary analysis based on the tenets of modern money theory. These components will help you improve asset allocation decisions and make your stock selection process more effective without incurring an equivalent increase in costs. They help overcome the risk and return limitations of single asset classes. In short, it becomes easier to generate a satisfactory investment performance. Our goal is to detect investment opportunities for you many months before they become apparent to the average investor. To look ahead, we use demographic patterns which tell us well in advance when to be on the lookout for economic turning points. In addition, every week we screen thousands of individual stocks, bonds, currencies, and commodities to ensure that reality is in lockstep with our investment scenario. You are invited to join us and open the right door to a new perspective on the economy and the financial markets. It should prove a rewarding and stimulative experience. Our goal is to provide advice and opinion to portfolio managers and strategists alike in order to build portfolios with an asymmetrical return distribution. Two considerations are essential to our philosophy. Firstly, we focus on the fluctuations in the number of young adult consumers. Throughout one's life cycle, important spending decisions are typically made at well-defined ages. First-time entry is the starting point. The takeoff from pocket money to the first regular income leads to moving out of the parents' house and the formation of one's own first household. Household formation is key to understanding the ups and downs in consumer spending. Secondly, we do a weekly comprehensive market X-ray called stage analysis. Stage analysis identifies in which stage of the cycle a stock, bond, commodity, or currency is. Is it building a base? Is it in an uptrend? Does it form a top, or is it in a downtrend? By screening thousands of stocks and other financial instruments, we are alerted to risks on a timely basis and identify emerging investment opportunities. Stage analysis is an entirely non-judgmental reality check. The base for our asset allocation discipline is demographics. The demographics of an economy are a very important factor behind the ups and downs in consumer spending, which accounts for a stunning 70% of GDP. Needless to say that it is the crucial factor behind the whole economy. The intro has already highlighted first-time entry as the starting point for household formation. Household formation is indeed the key driver behind consumer spending. Family formation is, apart from first-time entry, another very important motive for household formation. The chart shows the annual rate of change in the combined number of first-time entrants and family founders for the United States. In the past, there have been large swings in either direction, up and down, portending booms and busts, equity bull markets and bear markets. As one can glean from the chart, there will be a dip in 2016. The knowledge of past births allows us to reliably project the number of young adult consumers into the future. This chart shows the IFO Business Situation Index and the European Composite Demographic Indicator below. The latter combines the most important drivers of consumer spending, and again, one can readily observe how close the fit of both curves is. A balanced portfolio, which would always be 50% invested in German government bonds and hold a 50% DAX exposure whenever demographics are conducive to growth, would have yielded an average of 7.93% annually since 2001 until August 2015. This is clearly above the returns of the REX or DAX alone, or any linear combination of the two. Asset allocation decisions based solely on our demographic tools would have overcome the limitations of the single asset classes. Let's now move on to a special version of technical analysis called stage analysis. There are 4 stages defined as basing, uptrend, top formation, and downtrend. Any financial instrument can be categorized into one of these 4 stages. Applying our analysis of the German stock market from 2010 on until August 2015 would have shifted the average annual return for a fully invested, diversified German equity portfolio dramatically above the DAX buy and hold performance. Stage analysis is an excellent tool for stock selection. However, there are other uses as well. More information is available on request. Another element of our investment discipline has always been monetary analysis. Here, the development of sector balances is of prime interest. The use of M1 and lending data allows to approximate the annual rate of change in the domestic private sector, households and chiefly businesses. The fluctuations in this indicator are reflected in the movement of corporate bond prices, as the next slide illustrates. This chart was taken from our monthly Insights publication. Corporate liquidity is a standard feature. Corporate liquidity serves as an example of how an important aspect of modern money theory, i.e. the concept of sector balances, can be turned into a powerful analytical investment tool. Let us now summarize what we have looked at in our presentation. The demographic pattern of the US and Europe provides a firm framework for assessing the future course of the economies. This framework cannot be altered by policy, and it can be reliably projected into the future. The transmission process is firmly rooted in the life cycle, and the take-off of young people is the most important aspect because they experience the biggest relative increase in disposable income compared to all other population segments. Stage analysis enables us to track the effects of the shifts in consumer spending and the related repercussions on investment and trade across all financial asset classes, including commodities. Modern money theory provides the tools for assessing trends in income and profits, as well as gauging the functionality of modern monetary economies, notably the euro area.